Hello everyone, welcome back to another video on our YouTube channel today, and I hope you all are doing very well. So guys, this is going to be a continuation of our pre-market analysis series, which means in that series we will be discussing the post-market analysis of the current trading session, and also we will be discussing the pre-market analysis on how the market can perform on the next trading session. All right, guys. So these videos will be updated every single day, so make sure that you click on the bell icon and subscribe to our channel in order for you to not miss any videos. All right. So these videos are basically a series. I've even created a playlist in my channel for these videos. You can just click on this playlist and you can just check on it. All right. So without any further ado, let's get into a video, guys. And before we actually get into a video, I would like to show you guys my Twitter handle, which is right here, Arvind's BankNifty underscore BankNifty. You just type this name, you will get my Twitter handle. So what I do is that in this Twitter handle, I'll be posting these signals, right? So I'll be posting stock signals and I will be posting even options trading signals, right? So you can follow me on my Twitter handle to get updated. And also I've linked my Telegram channel's link here, which is the free trading signals channel. So you can just join that channel in order for you to get free trading signals. Now, if more than three people join, I will be giving free trading signals on Nifty and Bank Nifty options. All right. So without wasting any time, let's get into our video now. And I will also make sure that I'll link my Twitter handle is a link in the comment section and pin it. Right. So today is 24th November, right? So 24th November, something unexpected had happened, which I had expected previously, right? So without wasting any time, we'll start from our daily trading chart. Okay, so we'll be doing the post-market analysis currently. Right. So the last major resistance zone was this one. Yeah, it was this one. And when this resistance line got broken, you had a massive push to the upside. Right? You had a very massive push to the upside because this resistance zone got broken. Now, where is the next resistance zone even going to be? You never know because after this swing low was created here, which is right here, after the breaking of this resistance, this is going to be the first swing low, and then a swing high hasn't been created yet. So, when the swing high happens, I can expect the trend to stop maybe at least for 1 or 2 days. So, if for example, if the swing high happens somewhere around here, let's just say happens here, and two next, what is the swing high and swing low? First of all, let me tell you, after an uptrend, two consecutive red candles is known as a swing high, and simultaneously two consecutive green candles is known as a swing low, right? So swing highs and swing lows identify us in help us in identifying the change in trend of the market, whether it's bullish, bearish, or consolidation. So swing highs and swing lows are very, very important. With that being said, I'm expecting the market to create a swing high soon, and after the swing high, I will do my long-term analysis based on the swing highs performance. So as of now, the uptrend is massive. You can see that there is no wick in this candle. There is no wick in today's closing candle. So it is a very nice indication of an uptrend, which means you can see that the buyers are pretty much, pretty much well positioned. So in the 4 hour chart, moving on to the 4 hour chart, there's nothing much significant here. So we'll be moving on to the 1 hour chart. Okay, so on this 1 hour chart, there's a smaller thing right here. So this is what I mean. Okay, so look here, two consecutive green candles, swing low has been marked. Two consecutive red candles, swing high has been marked. Now after this swing high, you notice that the market went up quite some time till the swing high was created. Two red candles here. So this is going to be a swing high. Yeah, this is going to be a swing high. After the swing high was created, many people would have exited their trade and the market started to fall drastically. And it did rise again. It didn't. Basically, this is not a fall. This is a retracement till this previous area. This is a retracement till this previous area because this is going to be a order block right here. This area is an order block. So once this candle taps this order block, you can expect the market to move higher and higher and higher. And this is what happened after this. We saw the market had a massive push to the upside. And here you can see another swing high was created right here. but the swing high got broken. Hence, the market even took out this order block and this order block. So the market overwhelmed the sellers. The buyer overwhelmed the sellers, and the buyers are in full control as of now, right? So this is what is happening in the 1 hour chart. The RSI, you can see that it is trading above the, oversold, sorry, overbought band. The RSI is trading above the overbought band, which is very high. It has even overlapped this major band of 70. Yeah, the 70 band has been broken. Now, what can intraday traders expect tomorrow? Well, you see, that is why we're going to go to the 15 minutes chart for intraday trading, and this is where the market started in the 15 minutes chart, right? So this is where today's market started. No clear concerns for the first few hours. Here, swing low was created right here immediately, and this next swing high was created. So this swing high was broken, and once this candle got broken, you got a 39 points move right here. Of course, 15 minutes is basically a medium time frame. You get lately, so henceforth, I'm choosing to trade on this intraday trade. Right. So for intraday traders, what can you expect? Okay, so this is where the market started today for intraday traders, right? I'm sorry. This is where the market started today for everyone, irrespective of what kind of trading style you apply. And when this, so, when here is where this red candle is where the market started, you immediately got the swing low right here. There's two green candles right here. And you also have this major resistance zone right here. So this resistance zone broke this previous structure, this right here. This resistance zone broke this previous structure, henceforth it can be considered a valid resistance zone. Now what? Now what? Bank Nifty broke this resistance. Can you just take a buy trade? No. Just look at your stop loss. Just look at your stop loss. Your stop loss, if you were to place at the wick of this candle, you would have got a 126 point stop loss, right? You would have got a 126 point stop loss. Whereas, you never know when the market will perform a swing high and have a massive push to the downside or a massive retracement to the downside. So, can you afford? Listen, will you be affording 130 point stop loss for just 90 points, 92 points gain? I mean, no sane trader will be doing this, right? No sane trader is going to be doing this. So, decided not to take a buy trade immediately after this. This resistance zone was broken. Let me just redraw it for you all. And you can see this is the 50 period moving average. So after what I decided to do is that after this resistance zone was broken, I was waiting for the swing low to be created. Yes, the swing low has been created. Has the resistance zone been broken? Yes, and I was waiting for the market to create a swing high. So where is the swing high? The swing high was here. Why? Because two red candles, right? Two red candles. I got the swing high right here. So now what happened? This swing high got broken, right? This swing high too got broken. Now what happened here is that after the swing high got broken, what I did, was that simple. I didn't decide to take a buy trade here. I didn't decide to take a buy trade right here because if I had taken this buy trade right here, I would have put my stop loss here, and simultaneously, because this was an order block zone, right? This was an order block zone. There was this very high probability that the market will tap it back and go back here, which of course it did till here, right? It did till here. A one-to-one target has been reached, but I didn't decide to take a buy trade here. Why? Because this area, this area right here, this green zone, which is going to be a resistance toned support zone, this is going to be a major demand area, right? This is going to be a major demand area. So what we're doing is that it's going to be very simple. When all these prices are, when there is a huge gap in here, I expect the market to go. How much ever it rises, the market must come back to that area, tap that area, and then the institutions decide next move. Either it's going to be a bullish trend after tapping this order block, or it is going to be a bearish trend after tapping this, breaking this, and tapping this order block again and going down. So I expected the market to tap this order block again, but no, it didn't happen. But I realized that today was a buying day. You know why? Because the swing high was broken. Broken. Another swing high was created. Another swing high has been created right here, and this is going to be a major swing low. Going to be a major swing low. When this swing low was happened, what happened? I did is that I was looking for shorts, but the stop loss was just way too high for such a small points. 77 points stop loss for 39 points profit. No, and even guess what? This didn't happen. The market did go towards the shortfall direction. So I waited for the retracement. So what I did immediately was that when this swing high was broken, right here, the swing high was broken. I'll just clear everything for you all in a minute, right? When this swing high was broken, and this was also valid swing low, I waited for the market to break this. I decided to take immediately a buy trade, but guess what? After I took this trade, I mean, I didn't take this trade. I thought that the stop loss is just way too high. 49 points stop loss for 30 points. So I waited for a retracement till this area. What and as I had expected, listen, as I had expected, the market tapped the tapped the upper order block, went towards my swing low, which is also going to be my supporting order block right here. Tap this order block, I mean somewhat near it, just a very minor gap between these order blocks. So but if you look at like this, you can clearly see that the market has touched this order block. So and once this market touched this order block and created two green candles, I decided to take a buy trade on the third candle with placing my 68 points stop loss, and I waited till the market was to create the next swing high. So I just exited somewhere around here. I usually don't wait with my trades till 3:30 or 3 till the closing time of the market. I just close it on the third last candle. So this is going to be the last candle. Red color is the last candle. This doji green candle is the second last candle, and this one is the third last candle. So I decided to exit somewhere around here. Now, if you look at this, right? Now, this has been a major change, right? So you waited the whole day. The whole day, the market had a nice push to the upside, massive consolidation, short-term retracement, and then a very much high. Now, what most trader would have done today is that I will tell you the mistakes most trader would have done today, right? The most traders' mistakes what they would have done today is that I just delete this all for showing you the mistake. They would have marked this order block, not order block. This is going to be a resistance zone, and immediately when the swing high has been created, they will mark this thing as an resistance zone, thinking that the market will go up. So what happened is that they will think, okay, the market has broken the swing high, took two green candles, place your stop loss here, expect the market to go higher. So buyers would have got trapped here, their stop loss would have got hit, and the other guy is going to be the sellers. They saw this massive push down, expected the retracement, which did happen. Now sellers might have been a little bit lucky, because if they had placed their stop loss here and exited their trade immediately at here, which is going to be a 23 points risk for a 33 points rev, they would have been somewhat safe. But if they had expected the market to go down somewhere around here, then the sellers would have been trapped too. Now, why I didn't take these trades? I'll tell you, because today was a trapping day, right? Today was a pretty much a trapping day. So trapping days are nothing but when the market moves aggressively, the participants expect the market to continue in that direction, but the market shortly reverses its trend, takes out the opposite orders. For example, if there's a buy order, its stop loss is going to be a sell order. So what the market does is that it lavishes all those stop loss and it continues its initial direction. So after this, I really much knew that this was going to be a very much pretty much going to be a very important, or I mean a very much a trending day, right? So this swing high breaking was the reason for me to take this trade. If there was no swing high here, trust me, I wouldn't have taken this trade even after if the market broke this swing high. Because after the market broke the swing high, I would have placed my stop loss somewhere around here. So 866 point stop loss, which is certainly affordable for me. But immediately there is a wick, which is a resistance zone right here. Oops. This wick can also act as a massive resistance zone. This is just going to be a 52 points trade. So you're just getting, you're risking 66 points in return for 52 points. So this is the reason I wouldn't have taken this trade even if the market had broken this swing high. Fortunately, the market created a swing high here and simultaneously a swing low here, tapped this order block for us, tapped the upper order block for us, had a massive price rejection to the downside. RSI also, if you notice the RSI just went in somewhat into this middle band, not into this lower band or the upper band, it went somewhere near the middle band between the 47 to 50 area. So I knew that the trend was going to continue if the market, if at all this RSI had, broken above the 40 level below, I would have waited. But the RSI didn't break below this 40 level. So immediately after these two candles, I took this trade and boom, the market had a massive push to the upside. So this is how, this is how you need to trade to make money. Trading is not about emotions. Trading is not about the way you time your market. Trading is about how you stay consistent. You must stay consistent in your game. You must stick to your strategy, whatever it is. You must have a solid risk reward strategy, right? So yeah, trading is pretty much about controlling your emotions and doing the right choices over a long period of time, which in return will give you some massive gains, right? If performed correctly. So just because this market broke this major swing low, or just because yeah, so just because this market broke this major swing high, it's not going to be the only reason for you to take a trade. A market, market has many stages. First of all, market has a push, and then a consolidation, and then a manipulation, and then a retracement, and then a continuation of the trend. Now, this exactly has been reflected today. Look at this. Look at this. The market has a massive push up, quite pretty much some consolidation here, and then a manipulation, expecting thinking that the market will go higher. Now, head and shoulders pattern created right here, then a massive retracement, taking out all the stop losses which were here, and then continuing in the initial direction. So this is what I said. Rally, base, manipulation, retracement, and rally. This is my term, or you can also say that rally, base, rally, whichever suits you. So yeah, it's pretty much the same here. That's all you do. That's all you need to know, guys. So I guess that this video will be pretty much very helpful for you all. How much, before, after this is going to be the post-market analysis. Now, what we are going to do about pre-market analysis tomorrow, right? Now, tomorrow, this market can do two things. First of all, sorry, but I'm going to be taking a bit long time because it is going to be a very interesting and very intuitive video for you all. So, this is going to be our major demand zone. And as usual, this is going to be another major demand zone for us. So, because this demand zone wasn't tapped by this order block today, hence this itself became order block for us. Now, what happened is that once this market, tapped here, had a push down, push up, had a push up again. That's this previous high. Had a massive breakdown, push up, rally, and base. Push up, base, and rally. So, what can you expect from the market tomorrow? Well, you listen. First of all, I can say you that. Look. This is pretty much a double bottom here on the 1 hour chart. In the 1 hour chart, the RSI has gone band, and this has the market has created a double top, right? Now I'll just change the color for you all to make it a bit intuitive for you all. Okay, so pretty much the market has created a double top on the 1 hour. Push, base, another retracement, and then a massive push to the upside. So since this top has been broken, I expect the market to continue more higher. This is what double tops are all about. Double tops are about hitting them at confluence. Now, what about this 50 period retracement? Now, this is going to be a major headache for most people because since the market is pretty much away from the 50 period moving average, which is the market is currently 1.2% away from the moving average. So this next short term you must expect a retracement, and you can expect the market to create a double bottom and continue this market higher. Now this is what can happen, or if the market breaks the moving average, this is the moving average, it breaks it, retraces it and goes down, then you can expect the market to go lower. So the market is all about timing it. Now we have found a demand zone, right? We have found a resistance demand zone right here. And this as usual is going to be a demand zone or whatever it is. So this is going to be a monsoon. Now what where can you mark your support resistance zone? Now resistance zones are going to be pretty simple. Wait for the market to create swing high. If for example this one candle has already been created, if the next candle is red candle, then wait for the market to break this previous structure, right? Wait for the market to break this previous structure. Once the structure has been broken, you can mark it as a supply zone, and you can expect the market to come back towards it, create a double top and fall down, or go above it, retrace and go up higher. So these are the two things which can happen tomorrow in the market. Now, what about the gap ups or gap down? Gap ups and gap downs are not with us. It is based upon the order flow and most importantly upon the Singapore Nifty, which is SGX Nifty. So you must also keep an eye on the SGX Nifty for its movement over the day. So because that reflects on the next day, next trading session in India. So these are all the things which can happen. Now, if the market opens on a gap down, say, for example, gap down, if the market opens somewhere around here, let's just say that, then you must wait for the market to either tap this sort of block or this order block. So if this taps this sort of block, as usual, push up retracement on higher or push down retracement and lower. So these are the things which will be happening in the market pretty much all day long because so let me just clear it up for you all to help this bit neat for you all to you know right. So these are the only things which can be happening. So yeah, screenshot this guys. Screenshot this because this is going to be very intuitive to you all. You can just screenshot it, look at keep it with yourself for future users because this is going to be very helpful in the next trading session tomorrow. And that's it, guys. Pre-market analysis. We have kept it most simple on YouTube, maybe because our videos aren't going to confuse you with these complex support, resistance, order flow, or nothing. We are going to be just saying about we are just saying what will happen if the market touches this sort of block or if it touches that sort of block. So this is what we are doing, and we are doing two probabilities, which is a bullish trend or the next one is a bearish trend, or the worst probability is market staying in consolidation, right? So if the market stays in consolidation, then of course 90% of the people are going to lose the money because we are not the ones who control the market. If it's going to be in a bullish trend or a bearish trend, we are just players in a big pool of ocean. So go, there's a saying, don't swim against the tide, which means you must follow with the, if you're swimming in a river, go how the river flows, because if you try to go against it, you're going to get washed up. So it pretty much applies to the stock market though. You must trade with the trend. If you're not going to trade with the trend or trying to trade against it or create your own trend, you're going to get washed out because we are intraday traders or we are swing traders. We don't have much. We don't even have influence over the market. It's basically the asset management companies or the institutional traders which they are known as. So they are the ones that, their orders are the ones which actually influence the market. We just buy one lot, two lot, three lot, maximum five, six lots. They buy in thousands. So they are the ones who have real influence of the market. Their orders are the ones which can influence the market. So what you need to do is that you must follow the price action with full confidence, have a solid risk reward, follow through the markets, and just make money consistently. Of course, there is going to be losing days even for the rest of the best traders. But as I said, in the end month, in end of the month, you must be profitable. For example, if you're starting on January 1st, you may lose money on January 2nd, January 3rd, January 4th. But on the end of January, which is January 30th, you must be profitable. For example, in January 1st to 4th, you lost 4,000 rupees, and on January 30th, you made a profit of 10,000 rupees, which means you're in a profit of 6,000 rupees because 10,000 minus 4,000, 4,000 is your loss, which you're minusing from 10,000, you're in a profit of 6,000 rupees. So pretty much that should be your aim. You should not expect, you should not expect to win 100% of the time because we're all humans, we tend to make mistakes, and of course, sometimes the market even goes against us, even though the price action would have been good, the price actions, all the confluence would have matched you, but times the market tends to go against you. So this is pretty much with this saying, I guess, it's enough of today's video already. It's been more past nearly 30 minutes, guys. So I really hope that you like this video because this has been, in fact, one of the most intuitive videos which we have ever posted. We, in fact, went a bit in depth about the market psychology and order blocks. So I hope you all like this video and kindly do subscribe my channel, guys. You see, it's been 2 months since we started this channel and we're currently staying at 13 subscribers, which is 13 subscriber family. But we also want more people to be in our family and let's go on this journey together, right? And also, guys, have my Twitter account's link in the comment section and pin it. Make sure to follow me on Twitter too because I will be posting lots of signals and stock market related stuff, right? So, and look at this. This is a Telegram channel signals, free signals group. So you can just join it. And if more than 3 to 5 people join, then I will be posting free signals on Nifty and Bank Nifty options. So with this saying, love you all, take care, and make sure to take care of your health because health is wealth. Okay, guys. See you tomorrow.